Tell me something, Fred. You were just in New York, and you're saying that a lot of the stores are open now.
Yeah, I've been there. It'd been about a year, and the last time I'd gone through the city, there were a large number of stores that had just apparently not reopened. The slowdown in the economy had driven a lot of them either out of business temporarily or permanently. And this trip, I was surprised to see almost everything was either reopened or a new business had come into those spaces. And, it was a cold, very cold day, but the city was vibrant. I mean, there were people out shopping. The stores looked vibrant and busy. If it's a gauge of how the economy is doing from the consumer standpoint, people are spending money.
Well, it surprises me, too, because as you well know, and the media they're paying somewhat attention to this, but we have had a $4 trillion correction in the stock market sell-off. You're aware of that, right?
Yes, sir.
People are panicking.
Huge. So this is the onslaught of what's happening with President Trump's attempts to try to use tariffs as a method of gauging or moving the economy forward. So he's convinced that this is a process that's going to work. That is debatable. I think in the end, I'm having a hard time finding a way that this does not become inflationary. It's going to cost the public more money. If a foreign country is going to have to pay a higher tariff to sell their goods and services here domestically, obviously the prices are going to have to go up. But remarkably, a lot of people are beginning to translate what has become almost trade war environment because of the tariffs into the possibility of a recession. So they may now expect that businesses could slow down because of this competition amongst our countries, or the response from other countries. We're going to get pushback from those that we institute tariffs on. They're going to push back and do the same thing to us. This could create an awful lot of slowdown in the economy. And people are now saying, if you continue that thought process forward, that may turn into a recessionary problem. And as that becomes more and more clear, and this problem becomes bigger and bigger, and every day it's like another country that Trump mentions that he wants to address this issue with. This fear of recession is growing. It is translated to the stock market that everybody is thinking that all of these businesses will slow down, and the prices of the stocks are beginning to drop and drop and drop. And I mean, we had almost 1,000-point drop in the Dow yesterday alone.
Wow. And see, here's the thing. We were just reading on the news this morning about the Ontario energy suppliers, and I wasn't aware of exactly how dependent New York, Minnesota, and Michigan. I cannot believe how dependent they are on electricity from Canada. Just like, and they just raised 25% on cost, which is going to add about $100 a month to their electric bill. They're already making $100,000 to $300,000 a day off of supplying electricity. I thought the U.S. was just like independent of its own. I mean, we need to do something to fix this thing, because that's one of the things that people are going to be complaining about when they get that extra $100 a month in their electric bill. That's going to reflect right against the Trump administration for doing it.
It's it's a dual-edged sword. So, the idea of tariffs, it dates back hundreds of years. Even during the Reagan administration, they attempted some significant tariffs, but they recognized that it isn't a perfect process. If for example, I think we've talked about like Canada, let's say the aluminum that we import from Canada is about 50% of what we use in the United States. And a lot of people never thought about that either, because when things are working smoothly, you don't pay attention to this sort of stuff. But suddenly, if we're going to use the tariffs against Canada and raise the price of aluminum coming into America, well, the importer has to pay that additional fee. And there's no way they're not eventually going to pass that along to the consumer. I think the idea is that they hope that American production would increase if we stop buying these goods and services, the electricity, the aluminum, all the foreign goods that are imported. If we start developing those more domestically, that would help. But the problem is there's a reason why we buy foreign goods and services, because a lot of times they can produce it cheaper and they can sell us a product that we cannot create here in America for the same cost. So we're all going to pay these increasing prices. Now, Trump has referred to this as a temporary potential slowdown in the economy. And, even he has had to admit that this issue of tariffs could create a backwash that was unintended but necessary. Whether or not this is all going to work in the end is debatable. I don't know that this by itself is a method of solving all of our economic problems. But again, I don't see any way around the idea that tariffs will eventually cost you and I more money on all those goods and services that are imported. And I don't think domestic production is just going to ramp up that quickly to compensate for the volume of things that we accumulate. America has had a long-standing habit of buying more goods and services than we export. And that's going to create some real issues going forward. But the stock market is hating it because this whole thing has now become an issue of trade wars. So now we're in an environment where, economics was working smoothly between our partners around the world. Now suddenly everybody's getting aggravated with the United States, and even people that were generally considered economic partners of the U.S. are pushing back, getting aggravated with us. And if we go into a trade war environment, it is very likely that this could cause recessionary problems domestically. And again, not good for the U.S. because that forces the Fed then to have to lower interest rates, which makes our debt instruments pay less. And we need to be able to sell a lot more debt going forward because we are accumulating monstrous amounts of debt as we move into this new economic environment.
Well, and then again, Trump has announced that he is establishing a strategic Bitcoin reserve. And I'm like, oh my God, here we go. Just when we thought we had enough of FTX and Sam Bankman-Fried, now we're doing a strategic Bitcoin reserve based in state-sanctioned theft, according to G. Edgar Griffin's Need to Know article. I know you probably haven't read it, but see, part of the problem, if law enforcement believes that your property was involved in a crime, the property could be confiscated under civil forfeiture laws. The complaint is against the property and the owner, and now the owner, the impetus is on the owner to prove he's innocent. A huge violation of property rights, setting up a Bitcoin. If this is what happens, this is what we're moving into, is being able to seize people's property and to shore up a crypto reserve. And I don't understand. The logic here in setting up something like this using Ether and blockchain doesn't make any sense. It looks like Trump, who said that he was going to upright the economy, is moving in the direction that Biden and everybody else was moving in before Trump took over.
I think in some ways it's almost a day-to-day throw the dart at the board and pick something at random and see whether or not it plays out, and then backpedal it if it blows up in your face. The idea of a strategic crypto reserve, okay, I guess they're hoping to try to stabilize the value or perhaps put America in a position where if these cryptocurrencies are utilized more and more, that we at least would be established to be able to trade in volume, have our own position, which would benefit us, of course, if the value of these things go up. But since he started this, we've watched the value of the largest crypto, Bitcoin, go from 103,000. It was down to 79 grand yesterday. I think it's back at about 80 today. But that's a 20% haircut, in a matter of weeks. That volatility is something that concerns me dramatically, because I have said this multiple times. The cryptocurrencies, we can talk about the functionality of it, but in the end, we have to have a like-minded group of people that believe it has value simply because it's of its scarcity. And that's a strange way to establish value to something. I look at the idea, for example, like a silver dollar or a gold coin, and we can say, hey, there are rare ones that have an established value because of their scarcity, but at least underlying that, there's a physical quantity of metal that they're made of. So they have intrinsic value. When it comes to things like crypto, first of all, they're not physical. They don't actually exist. You can't hold a Bitcoin in your hand and do this kind of thing with a Bitcoin.
Or like that.
Right? They don't physically exist. So we're talking about something that we are creating value with a like-minded group of people, and if that is subject to change, so is the price. And to see it evaporate to zero is certainly potentially there. To see it skyrocket in value, that possibility exists. But it's interesting that they're exploring these options. And I always recognize that the only rationale for it at all is the fact that people have lost confidence in the U.S. dollar, right? Because why would anybody care about any other type of currency if the dollar was functioning properly?
Why would they? And see, that's the thing I have about crypto. I will never invest in it. I will never have a digital wallet. I know what all these people say. Look, we'll put free coins in your, we'll take and we'll absorb all this debt and convert it into cryptocurrency and establish a blockchain. And but when blockchain first came out, I went into a panic mode. I mean, it's like, whoa, this is crazy because they're going to try to digitize everything. It's bad enough they've digitized mortgage papers and they're trading it on Wall Street through the MERS system. Now we're sitting there with a situation where Trump is going, oh, well, we're going to have to do something about, this timber because all these production builders want to build these little pig, let me come in and I'm going to build this stick house. And then the big bad wolf's going to come in the form of a tornado, like the one that hit Orlando area yesterday, right there in the middle of this guy's weather forecast. I mean, literally, he had to tell the anchor people to get into the table because they were getting debris from the tornado all over the TV station. And I'm just like, okay, look, if we're going to do this, I got to send you to shopaffortablehomes.com if you would, because these are steel SIP homes, especially those of you in areas that are prone to tornadoes and prone to hurricanes. You definitely want to go look at it. Shopaffortablehomes.com. I am involved in steel SIP production, and we get our steel here in the United States. They manufacture it here. The panels that we build the houses with are manufactured in here. They're in the U.S. They're U.S. made, which is why, when the lumber prices go up because of these tariffs, folks, you're going to want to try to get a house built cheaper because it's going to cost the production builders much more money. And that's part of what the tariffs have done. So we, the people, have to start thinking smart, which is why I mentioned that. Now, Fred, you've been watching the gold, whether they're going to audit Fort Knox or not. Is that going to make any difference if they find out there's gold there or there's no gold there? Is that going to make a difference in gold prices? Because of demand?
I really don't think there's a thing there. I think this is a non-thing thing, all right? When Steve Mnuchin was Secretary of Treasury, he went to visit Fort Knox and determined that the gold that they expected to be there did actually exist. What most people don't remember, though, is that there are two holdings of gold in the United States. There's the Strategic Gold Reserve, and this is a quantity of gold that is held in Fort Knox. It's considered by the United States to be its emergency reserve quantity of gold, the way that they hold an oil reserve for the same rationale in case of drastic emergencies. However, the bulk of the gold that's held by the United States in monetary policy is actually in the Federal Reserve Bank building in the sub-treasuries in New York City. And that's where all the bulk trading of gold occurs. They have that massive vault and move gold around between the vaults as countries buy and sell and trade. So the bulk of our gold isn't held in Fort Knox and actually hasn't been for decades. But there is a strategic gold reserve that is held there physically. I don't think there are going to be any surprises when they go in there. But here's an interesting thing. I think of this as like a candy compared to the dinner. So as we talk about the crypto stuff that we're talking about a strategic supply, the state of Wyoming has done something rather interesting. They passed a law, and they passed it, which I didn't think was going to happen, SF 96. It requires the state treasurer to start stockpiling physical gold and silver. And Section 2 of the bill calls for the application of a process that would allow for the payment of people in Wyoming to actually use gold and silver to make payments to the government in Wyoming. I think this is an incredible bill that was passed by the governor, and I think every single state in the United States ought to follow that pattern. I would love to have the opportunity to conduct commerce in my state with gold and silver, and if I had to pay taxes or pay whatever I have to the government, the option of being able to pay that in physical gold and silver to me is extremely attractive. And to force the state to take some of its sovereign wealth fund and denominate that in physical gold and silver would help protect the wealth of everybody within the state from the inflationary problems that we all experience with dollars losing value. If a state can do this, every state should do it. And I think this is more appropriate. I would rather see Trump say, I want to increase the gold and silver strategic reserve supplies of America, or go back to a method for the public to be able to conduct commerce on a national scale using actual gold and silver to conduct commerce again, this would be much more beneficial to me than anything we're going to get from establishing some cryptocurrency, basis and a stockpile of cryptocurrencies.
Well, here's the other thing, too. Just as late last week, Idaho formally ended state income taxes on gold and silver as part of the largest tax cut in state history. It was called House Bill 40, and it was sponsored by House Speaker Mike Moyle and begrudgingly signed by Republican Governor Brad Little, which provides a sweeping $253 million income tax cut for Idahoan taxpayers by lowering the rate from 5.695 to 5.3% while adding two specific exemptions, including a tax-neutral provision whereby taxpayers back out any net capital gains or losses that meet the definition of precious metal bullion or monetized bullion included in the taxpayer's federal adjusted gross income. What do you think of that?
That's awesome.
Good
so
move.
The state of South Carolina, about 25 years ago, they used to collect sales tax for the sale of gold and silver and coins. Now, we argued with them at that point that, for example, a silver dollar, like you were holding up, was constitutionally legal currency. And the fact that if I owed the Treasury Department a dollar, and I showed them one of my old silver dollars here, and I said, okay, well, I know this has, well, today anyway, $30 in value, $35 in value, and the silver content, how much value do you assign to it if I use it to pay my tax bill? And their response was $1 because it has legal tender status. So my argument was then if it's only $1 for me to be able to use it to make payment to you, how can you charge somebody a sales tax at any higher rate than its face value? And it confused them so much that eventually they just simply wiped it out and decided they were no longer going to collect sales tax on the sales in domestics, in state sales of gold and silver coins. So we're able to do that now without collecting sales tax in half of the 25 years. And several states still collect sales tax on gold and silver. But little by little, I think this is becoming, more beneficial and more popular. And it seems like it's way overdue. I'm surprised there are still states that are trying to collect sales tax on the gold and silver. Certainly beneficial for those that are investors in the market. And for those that are thinking about gold and silver, look at the volatility that we're seeing. So are you familiar with the VIX?
Just barely. Go ahead and explain it, because our listeners, I'm sure, would like to get an education, Fred.
So within the stock market, they have what they call the VIX, which is the Volatility Index. And basically, it's a representation of the experts' expectations of how much up and down movement we're going to see today and tomorrow in the stock market. If the market's stable and only going up or down a little bit, that VIX number is going to be very low. Traditionally trading at around 8 on the number, anything above 10 is generally considered high. We went over 28 yesterday on the VIX, which indicates that is a huge amount of volatility is the current expectation. People are expecting the stock market to go both up and down, but a lot on a day-to-day basis, not 50 or 100, but like we saw yesterday, 900 or 1,000 points a day. The higher that volatility, the more concern people should have about things like their retirement accounts that are tied to the stock market. So everyone's 401k is at risk. Everyone's retirement account that's in the stock market is at risk. All the mutual funds, because if the stock market continues to tank on these trade war fears, the volatility is going to create a problem for people. I've never seen a better time in my 40-year history for people to be diversified and own physical gold and silver than what's currently happening. We just can't anticipate all of the things that are going to happen over the next few months, because every day this current administration is, they're changing the rules or making it up as they go along and then trying to figure out whether what they did made any sense. That's a difficult time for people to live in, especially if you're retired or approaching retirement. What you want is stability. It's okay if the stock market goes up and down a little bit every day. That's perfectly normal. But it should happen because of the trading of the volume of stocks, because of what's happening within the companies, not because of a broad external market environment being created by, the apple cart being completely thrown upside down and nobody knows what to expect tomorrow. So these tariffs, these trade wars have created a very uncertainty to a degree that we have not seen before. A volatility index of 27, 28, 20, that is insanity for the markets. It just means that you can't count on what's going to happen tomorrow morning when you wake up and look at your stock portfolio. But I'm sure people are not happy about what they've seen since January.
Yeah, I know it. And Fred, you look at the situation and the way people are, and you just said that their 401ks and all their retirement and pensions and everything are invested in something that's extremely volatile and is based on fiat currency. It isn't based on this tube of silver dollars I've got right here in my hand that I bought from Fred. So, I've got a bag at the post office right now waiting for me. So
right.
He sends him restricted mail so only you can sign for it. You talk about secure way to buy silver and gold from Fred Dashevky at uscoincapital.com. That is the address, and that's why we have him on, because Fred studied the economy. He studied all this stuff religiously in college. He's degreed in it. He is a coin grader. He can look at Mint State and, grade that. He has third parties that do the same thing. I mean, I've gotten a great education having Fred on the show, and we always appreciate it when he comes on. Now, so what do we have going on this time as far as, do we have any specials that you're offering?
I've always looked for the values or the things that seem to me the most undervalued and make the most sense given the current environment. So I have put together a package of 2 rolls of those peace dollars in what we call AU condition. AU refers to almost uncirculated.
Wow.
So these are super close to being mint condition, but they have the slightest little hint of wear. Like a new car that you just drove it off the lot, technically speaking, they don't call it new anymore. But if you had under 1,000 miles on it, the thing is about as effectively as new gets. And that's the same thing with an AU coin. They're bright, lustrous examples, but they're not selling for much more than the metal they're made of. They run around $39 and change per coin. I put together a package of 2 rolls, comes out to $1,590. That's 40 coins. There's 20 coins in what's called a roll, and a roll is exactly what you just held up. Those general tubes, 20 coins in a tube. You get 2 of those tubes, $1,590, and they're going to be just like these, just like the ones you're holding up.
They're peace dollars.
Peace dollars.
Yeah, just like this right here I'm holding up, folks, a peace dollar, just like that.
That's exactly the coins. So these were struck from 1921 to 1935. And they were the last silver dollars minted in U.S. history.
So this is the thing, 1921. Let me see. This is 1923.
Yes.
So I mean, this is just there is 19. I mean, they're all different years. And here's the thing, folks. I mean, when you're investing in stuff like this, I mean, here, I was holding this up. I felt almost like Vanna White, except I wasn't spinning a wheel, And she only works 34 days a year and gets paid when she gets paid. And here we are sweating bullets on our end trying to figure out how to make the economy work. So that's one of the reasons I have Fred on the show, because I buy all my gold and silver from Fred. Because Fred comes on here and puts it in nuts and bolts, common sense terms that everybody can understand. And for those of you that have a pension, you're going to get taxed if you try to withdraw it, but every year, when you hit a certain age, there is what we call required minimum distribution, or RMD. Fred, you can explain a little bit how that works, because you probably can do it better than I can.
Well, basically what they do is they make you start pulling money out. And of course, depending upon what kind of account you have, there are those that were deferred in taxes. So you didn't pay it when you put the money in and you pay it when you pull it out. Other people have different types of accounts where the funds were already taxed, so when they withdraw, they're not paying taxes again. But we're all getting hit with a subtle tax that nobody forgets, or nobody remembers, and they do forget about, and that is the inflation of the dollar, which effectively I look at as a tax, because that's how you have to see it. So let's say that you've put your money into your retirement account. Now you're forced to start to have to take some money out. The problem is that your expectation when you put the money in was that you would have a certain amount of value and buying power to use that capital for your retirement. The problem people are finding is that they're getting the amounts they expected, but they're not getting the value and buying power, because the value of the dollar, while it was sitting in those accounts, was being inflated. And this problem is getting far worse, because the gap between what we're able to get in interest payments from the more conservative investments like treasury bonds or CDs or just interest on checking accounts is way lower than the amount of inflation is chewing up of the value of the dollar in that same period of time.
Wow.
So you'll see more dollars in your account than you had before, but the purchasing power is going to be less than you started with. This is a real problem for retirees and people coming into that age. Again, I've never seen a better time to diversify into gold and silver than what is happening right now.
Thank you so much, folks. We will see you tomorrow.